Brett Sifling, investment advisor representative, Gerber Kawasaki, and also Tuna Amobi, director, senior equity strategist at CFRA. It's great to see you both. So, Tuna, I'll begin with you. What did you make of the numbers?
Nicole, good afternoon. I thought those numbers really blew it out of the park. The streaming number update that we got, 28.6 million Disney Plus subscribers, way above even the most optimistic analyst estimates. When you look beyond that, I think you're starting to see halo effect on other streaming offerings, especially ESPN Plus. Across the other segments, I thought this film studio and the theme parks actually performed above our expectations as well, especially with all of the momentum that we see with all the franchises, and nothing really suggesting to us that there's been any kind of major slowdown with the consumer spending. The one thing, of course, was the coronavirus, which was not really a factor in December, but we know that the March quarter will have some negative impact, and we're able now to start to get a better handle on what impact that might have on the for the March quarter. So that was the one overhang that kind of was looming over those earnings call.
Right, and you there at CFRA, Tuna, still hold your buy rating, right? Price target of 160. Brett, what did you think about the numbers? I mean, they certainly seem good. You see a little bit of a sell-off on the stock. What does it mean for some of the other names in the streaming world? One of the analysts actually said that he thought with all the cord cutting that's going on, even with this great number from Disney, that Netflix still really holds a great outlook.
Yeah, I mean, if it wasn't for this coronavirus, like you said, Disney would be firing on all cylinders. It's interesting to see that Netflix was up a little bit, that they viewed this Disney Plus crushing it as more of a net positive for them, less of competition. But, you know, they've got great movies. It's a shame that Mulan is getting released right now, since all the movie theaters in China are in fact closed. But they got a lot going for them, and content is king, and Disney is truly arguably the best in the world with content right now.
What about the revenue beat that we saw, rising revenue, Brett, for merchandise licensing? That's very clear and very tangible. What's not as clear is the run-up that we saw with the announcement of Disney Plus, how great everybody took to Disney Plus. But now it's just not as clear what's next, because they really didn't give us guidance. Did that give you a little bit of a spook, Brett?
Well, no, not really, because Bob Iger, you know, he was being very conservative with his guidance. You know, they're expecting to get about 60 to 90 million subs over the next 5 years. I even think that that's low. I think that they can get to 100 million subs. And, you know, he said in an interview yesterday that he's playing it safe right now. It's only been out for 1 quarter. It's off to an amazing start, but we'll see this momentum, you know, continue throughout the year as, you know, Baby Yoda comes back with The Mandalorian in October, and they're going to continue to grow this platform, and their pivot to streaming could not come at a better time. You know, I was on here a few months ago when the service launched, talking about this is the death of cable TV.
And Tuna, you say that more traction seems likely as Disney Plus debuts in some of the other countries and other areas. You mentioned ESPN, Hulu, something that we also take into account. I will say, Tuna, that they talked about the hours, right, that people were watching 6 to 7 hours on Disney, Roku and Netflix 9 to 14 hours. So the question is this endless? Is this an open opportunity?
Well, you know, I think, you know, it's pretty clear to us that there's pretty high customer engagement on the Disney Plus platform. And while they didn't really get into the details of that, you know, the color commentary shows that it's having a positive impact on churn, viewership, etc. But I also want to go back to the other point. When you talk about 60 to 90 million guidance that the company provided, I think what's really lost on some investors is the fact that that was a global number, of which they said that the U.S. Was supposed to contribute about a third of that, so 20 to 30 million. So now you have a situation where the U.S. You know, launch is literally blowing away that 5-year forecast literally in the first few months. So you begin to get a sense of the potentially significant upside, especially as they get ready to launch in Europe starting next month and across the summer, which really leads us to believe that globally, that 60 to 90 million, it's really going to be obliterated sooner than later. And I would argue, even to be provocative, that that global upside could potentially exceed 150 million within that time frame.
So with that in mind, Brett, last thoughts, because I know we Tuna mentioned the coronavirus, and that's sort of an immediate story. The outlook going forward, do you think that this is an investment? Do you think this is the way to go? Or is there something that stands in your way to actually really like this?
Yeah, no, I mean, the coronavirus is definitely something we're watching very, very closely. Obviously, the Shanghai park and the Hong Kong park are both closed right now. They're saying that that could affect operating income about $145 million. I think it's going to be more about $100 million if it's closed for a few months. But, it's going to hurt them. But the long-term story here is the streaming and their growth. And so we're going to continue to see the valuation repriced. And, I think once that coronavirus is out of the way, the mouse is going to be back on the move to $200.
And we know that people are still cutting the cord, and they love these streaming names, and that they are willing to have certainly at least one, maybe two or three or four all at the same time. It's wonderful to see you both. Thank you so much. Brett Sifling, Investment Advisor, Representative Gerber Kawasaki, and Tuna Amobi, Director of Senior Equity Strategist at CFRA Research, with a buy rating on Disney.